Okay. Good morning, family. Hope you are doing great. Hope you had a good night rest. Alright. So, so for today, it's gonna be this call is for beginners. All right. So, the intermediate guys or guys that have had a level of knowledge, this might not be for you. But if you're a new guy, you're new to trading, then ensure to tag along. So today I'll be diving into uh, how to trade different market conditions for HFX, right? Today is basically for HFX. I've gotten so many questions. Um, how do you choose the best expiration time, right? These are questions I've gotten. How to choose the best expiration time? What's the best time frame to actually trade? What else? How to know if it's to buy or to sell, even, you know, uh, one of the challenging tasks is to know the best expiration time, because you can take a trade for 15 minutes, 10 minutes, 9. It's not like the traditional forex where you get to monitor the trade or have your designated SL or TP zone. This one, you need to be very sure that within this space of time that the trade or your anticipated move will go the way you want it, right? And choosing the best expiration time is very key when you start trading on your own, right? When you start trading on your own. And these factors are based on, and this particular decision is based on several factors. Number one is to know the market condition you're faced with, right? We have number one, ranging market, right? Where you have a particular zone. It can also be called price trap, right? You have a particular zone, and the market keeps playing around that zone. Sometimes it can go just a little, you can see crazy moves, but you can tell that whatever it's doing is not breaking any particular zone. Once you see this is a clear price trap, and all you have to do is to take advantage of the move, right? So whenever the market comes to the resistance zone, you take your sell. When it comes to the support zone, you take your buy. It's that simple, right? And areas like this, I don't want to talk about traditional forex today. It'll help me. Right? I want to say something now, but it has to do with traditional forex as well. I don't want to talk about it. Then when you see trades like this, or when you encounter price trap like this, there's also a midpoint. It's also wise to mark out the midpoint, right? It's also wise to mark out the midpoint. Now, why did I say marking out the midpoint? Is perhaps you wouldn't want to be targeting, let's say you're taking your buy here. You might not want to be targeting, oh, I'm expecting the market to get to this area, right? What you need to do is that my target, let's say whatever time, whatever expiration time, okay, you have a midpoint, that's where you are targeting, right? If the market gets there, at least you know that within a splitted time, depending on the charts you're analyzing from, right? That will guide you on where you're expecting the market to get to, considering your midpoint as well, right? And when it gets to the higher area, that's your resistance zone. You're targeting the midpoint of that one as well. So this is where I'm targeting. I don't want to aim too much, right? Within so time, I think and I expect this market to get here, right? This actually guides you when taking trades in a price trap, all right, or a ranging market. This same thing can apply even when you're trading a traditional forex, right? You set your TP at the midpoint, and that's even how Kojoa does it. It doesn't aim all the way to the extreme of the other end. Somewhere around the midpoint, his TP is there, and market, you are certain, yeah, there's a high chance that it will get to that midpoint than it will get to the other extreme end, right? There's also another market condition that you need to put into consideration. We have another one. We have another one. This kind of condition, you don't necessarily need to trade it, right? Because this is a choppy market. You can't tell whether it's an uptrend. You can't tell whether it's a downtrend, right? You might see something like this. You think this market is going down. Next thing, it flies all the way up. You know, it's so choppy. There's no direction in the market. It's so choppy. Like if you some days, right, the market does this. When there is a loss of indecision in the market, right, and you wouldn't want to be caught up in this because if you're caught up in this kind of market condition, you start questioning everything you know, right? You start questioning everything you know, like how I'm seeing a clear zone that I should be taking sell, and this market is buying. Does it mean I'm not really good at what I'm learning? Or does it mean I don't even know what I'm seeing? It's not you, it's just the market. And it's the wrong time for you to be trading at that particular time. I tell you, it's the wrong time for you to be trading. Okay? It's not wrong for you. So if you see, in fact, the main thing is if you look at any chart at any particular point in time and you're not seeing any clear sense of direction, stay off. Choose another pair or stay off the market entirely. All right? Choose another pair or stay off the market entirely. All right? The last kind of market condition is the trendy condition, right? Where you're seeing a clear new highs, higher lows, higher highs, higher lows, higher highs, higher lows, lower highs, lower lows, lower highs, lower lows. You can tell that, oh, this is a clear trendy market, right? And how you trade these market conditions are different, right? For this range, this is Euro GBP. Look at Euro GBP. From this is Friday to Tuesday. Right. Today is Tuesday, yeah? Yeah. From Friday to Tuesday, the market has been within a particular range. You can see it. You don't even need, I think I need to take this off. You don't need a soothsayer to tell you that this market has been ranging, right? You can see how clear it is. Now, the best thing to do here is, and another thing you need to know is that in HFX, you don't really have a business with 1 hour time frame, depending unless you want to take a 1 hour long trade, right? Or 2 hours long trade. You don't really have a business. This is high frequency. And when it comes to high frequency, detail matters a whole lot, right? You need to break it down to the tiniest of time, right? So in this case, you don't really have any business with 1 hour time frame. Okay. So 15, 5, 1, whatever the case is. So in this 15 minutes time frame, first thing you're going to do is to mark out your zones, right? So let's say let's say you are doing analysis on this particular pen now. Where are my strongest zones? This is so clear. I mark it out. This is my strongest zones. Why? I have multiple reactions. 1, 2. multiple reactions on this particular zone I marked out now. Multiple reactions, right? For my lower area, where is my strongest zone? You can mark this. You can increase the thickness so it will be a little clear for you. All right. So we have multiple, 2, 3, 4, as the case may be. Then you can mark out the midpoint. Right? If you're so confused on how to get the midpoint, just take your Fibonacci, right? Pick the highest to the lowest, right? The 50 level of the Fibonacci is your midpoint. And just have that, mark it out. These are 50 points. You can see it here, 50%, right? I just keep our line here. All right. Then take out the fib. Because we're not using to do anything here. So what are we seeing here? So if the market gets to a lower point, we'll take a buy, targeting the midpoint, right? If it gets to a higher point, we'll take a sell, targeting the midpoint, right? This is just for 15 minutes, right? This is just for 15 minutes. Now, there are situations where, like what we have here, though it has reacted first and coming back to do multiple reactions, there are situations where the particular market you're looking at is going to buy, but sometimes it does a little delay, do a little play around, catching liquidities, right, before making that particular move, right? I always tell people here, in any time frame you're looking at, any time frame you're deciding to make your decision at least go in 3 candles deep, right? So if you're looking at 15, go in 3 candles deep. If you're looking at taking just 15 minutes expiration time, this is what I'm showing you here today is for personal analysis, right? Your personal analysis, it will help you, right? It will help you to see a bigger picture, basically. So if I'm looking at taking 15 minutes expiration time, I just want to take 15 minutes. I would want to see my entries on the 5 minutes, right? It would make more sense to me, right? Let's say we have a case here, right? Market go here, 15 minutes, 1, 2, the third candle, you're in good profit, right? It comes here, 15 minutes, 1, 2, 3, right? And another thing you need to know that is that be mindful of the amount of trades you take on a particular zone. It can be beautiful if you can take like just 2, if they get to react immediately before getting to the lower part, right? Let's say in case like this, you got here, you took your sell, amazing. You got here, you took your second sell, that's great, right? But it wouldn't be, there's a situation where if there are multiple reactions here, it might tend to break the zone. So to be on the surface, you don't even need all those, you don't need tons of trades, right? It's not about the number of trades you take. It's about the key ones you take and their quality, right? There's no rush, right? There'll always be a ranging market. There'll always be a trending market, right? So in this case, I'll gladly wait for the market to get to this zone. Once it gets here, I see it and I take 15 minutes. So first and first is to spot. Now, if you now this is a ranging market, but on a lower time frame, you can see that it's a little bit trendy, right? So you can actually kill 2 birds with 1 stone. You can have your pending order, let's say, right? At these areas. Okay, I'm targeting a sell once the market gets here, right? But on the lower time frame, which you are looking at 5 minutes now, if you go down to 1 minute, it will even make more sense. On the lower time frame, I'm seeing a trendy market here. Now, let me break this down for you. Remember, we have a midpoint. That is our target. Let's say we entered at this place for a buy. What did the market do? The market kind of broke the midpoint, did a little bit of retest, and of course, did what it did. Came back again, and we tested on that midpoint. We might say, you know what? Neglecting the midpoint, let's look at the trend. This is a low, this is a high, this is a low, this is a low, this is a high. Does this qualify for a trending market? Yes. So what do we have to do? It's simple. When it comes to trending markets, the best strategy to use is under the break and retest strategy. And it's that simple, right? The break and retest strategy. Now, I don't want to use this area. Let me use this area, for instance. What is break and retest? Break and retest is the tendency of the market to break a former high and come back to retest that former high. The tendency of the market to break a resistance and in turn use that resistance as a support. The tendency of the market to break a support and in turn come back to use that support, that former support as a resistance. That is under, right? And if you're able to spot these areas, that's a Q zone for you. Imagine, right? You're looking at this particular area. Let me make it very clear. You're looking at this particular area, right? The market has made this move already. What are you waiting for? It made this high, started trending downwards, and in turn came back to break this high. What are you going to do? You mark this high out. Just mark it, keep. Now, once this area has been broken, your target is to take any trade that drops on this zone after it has been broken, right? And what happened after the first 5 minutes candle? The next candle that dropped here, boom, 3 minutes, sorry, 15 minutes, 5, 10, 15, it cleared your trade. What happened next? It came back again to this zone, 15 minutes, 1, 2, 3, cleared, and you're done for that zone, right? And you're done for that zone. Now, you don't just take any zone, basically. We have a high here. This is just 1 point, right? Banking on this might be, this is just 1, right? We need, for a zone to be valid, basically, we need at least multiple, 3 to 4 reactions on that particular point. You can see how you just have 1 reaction here. What happened the next time the market came here? Oh, it's not so clear. You waited, okay, let me get a better reaction. It came in, dangled. But like, no, this is messed up, right? So if you're to peak, right, you might as well go for this lower one. At least you have a clear 3 minutes, 3 reactions here. And what happened? The next time the market came here, reacted pretty well. The second time, reacted pretty well, right? So it is so clear, right? On any time frame, you're going to see this. On any time frame, you're going to see this. You're going to see the market reacting this way on any time frame, right? You're going to see the market reacting this way on any time frame. I use Euro GBP because it's ranging pretty well on the 15 minutes time frame. So if you get caught up in any serious ranging markets like the Euro USD, it's simple, right? It's simple. Your own work here is to mark, this is the highest point of the market, right? You can choose, okay, this is the highest point of the market, right? This is the highest point of the market. This is a clear resistance area, right? We have like 1, 2, 3, 4, right? On this particular area. So my deal is, if the market can break this area and come back to it, I am good to take my buy. If the market can break this area and come back to this particular point, I'm going to take my buy. It's that simple. And once you get this area, all you need to do, copy the address, copy the price, set your pending order, and wait for it. You don't need to be there forcing the market to, just allow it, right? And one of the ways to actually get good at this and calculating your accuracy is to start with a demo account. Do the analysis on your own. Just do it. I have a friend during his early days, right? He does this analysis on his own to compare how good he's getting the perfect or near perfect entries, right? Just do it. It's your personal trade, your personal analysis. Why journaling as well? I saw this, I saw a clear zone there. I took the price for 15 minutes. Why taking it on this particular time frame, allowed it to play out. This it didn't play out. It's depending on the reaction, whatever it reacted, yeah. Let's say for the first 10 minutes or for the first 15 minutes, it was below my zone. And for the next 25 minutes, it started buying. So that means um that's to tell you that you might need to refine your entry. But then you mustn't always get the perfect entries. You just have to be comfortable with that. Your entries mustn't always be perfect. The market always do what the market will do, right? Then another thing is there is not also a perfect zone, right? The market mustn't always, you have okay, you have a case here. This one safe. So I'm kind of mixing somehow anyway. I have a case here. You have something like this, this, this. It's not always like this, right? It's not always like this. What I'm trying to show you is this. You don't always get a perfect, oh damn, the market left here and came back to my exact entry and boom, right? It's not always perfect. Some days you're gonna see something like this, right? Even this way, right? Before the market extends to wherever it's going to. Sometimes you're gonna see something like this, it's not always perfect, right? So your goal is to pick those ones that align with your zone. That is all. That's one thing about zone there. Pick the ones that align and you're good to go, right? That's why in your personal analysis, compare different time frames. It's just like you're taking take these trees here mechanically, right? You're just like a robot. Oh, once I see this, I do. You're taking in data. You're taking in data, right? So over the period of 1 month, this is how this market reacted on this kind of trade. My zone does is either they reacted on the new support or they broke it and now make the move. This is actually the best way to learn, right? Because you're seeing this for yourself. You're comparing, imagine having a whole month's data and comparing it. Oh, wow, that can be so amazing, right? So this is a trending market. Let's say we want to analyze this, right? So what we are, okay, the line, all right. So for lines, we have, I've already highlighted those I use mostly, right? If you're using your laptop or your phone, whatever, we have the trend line. The trend line is you can map out where you want to mark out here. This is a trend line. This is how it is. You can draw it anyhow you want. This is a trend line, right? So if you want, we have the horizontal ray. Horizontal ray is from a particular point you want, extending to the future. So there's horizontal ray. Pick it. You can see from this particular point. Then we have the horizontal line. Horizontal line is into the past and into the future. Infinite, right? It runs through. So if you mark this, if you go into the weekly time frame, you're still gonna see this. If you go way back 3 years into this chart, you're gonna see this line running. If you go into the future, next 10 years in the future, you're gonna see this line running, right? So that is it. Then to have them on let's say to have something like this, yeah, all you need to do is to add them to your favorites, right? You can add this to your favorites. You can see I have new one here. You can add this to your favorites, have it here. So to make it easy to use, right? If you use your smartphone, if you have anyone on your favorite, you're going to see it on your screen just by the side, right? So that's a way to actually make, just choose the ones you use often and have it there. You got that right? You're welcome. So back to what I was saying. We have, right? So we have an area, let's say this, for instance, this is a clear resistance. So our deal is, next time the market gets to this area, we're not take our buy. I will like we have loads of reaction here. What am I gonna do? I'll place, sometimes it's even best to use a horizontal array. So you're sure you're getting the best price, right? So I'm having this, I choose my horizontal array, right? If it's not so clear on this 15 minutes time frame, I go down to a 5 minutes time frame to be sure I'm getting the precise points, right? So in this case, you can see I missed out on these guys, right? I can decide to adjust depending on how I want to do it. So the time frame you're working on matters a whole lot. So you're working with 5 and you are picking, right? We have, what's it called? Choose an area that has the highest number of reactions and lowest number of fake outs. What is fake out? This is a fake out, right? So if I'm to choose this point, at this point we have 1, 2, 3, 4, just 4 reaction here. At these other points, we are having 1. Let me expand this so that it will be clearer. At this particular point, we are having first reaction, second reaction, third, fourth, fifth, sixth, seventh, possibly 8. 8 reactions and 2 fake outs. What is fake out? A candle closing above your supposed resistance or the supposed area of interest. So we have 2 fake outs here and 7 reactions. So this is actually stronger than just 3 points, right? The tendency of the market coming to this place is lower in terms of the market reacting to this, right? But the tendency of the market reacting to this area is lower than in terms of the market reacting to this. The market can come here, let's say, the market can do something like this. Let's say finally this area was broken. I can just come back and just break this as well. It won't even respect this area, right? But in this case, you might have something like this. And why the market cannot, if market gets say embrace it, there's also a tendency for the market not even getting to this area at all, right? There's a tendency for the market not getting to this area at all. So when looking, oh damn. When looking for your areas here, you are targeting, when you're looking for buys in these areas, you are targeting the lowest, best area possible. It's just like you are buying, what's it called? The lowest area possible. Let's say you want to buy a smartphone, right? You want to buy iPhone, whatever. You have a dealer telling you, let's say 700K for maybe 12 or so, or 13. You are looking for a dealer that will give you same products at a lower price, same iPhone at like 650 or 630, right? So that is it. When it comes to buy, you're looking for the lowest, best area possible. So let's say we choose this. What the market do? Respected again, then broke. Now this is a very close reaction here. It broke here immediately. It reacted immediately. So this is like a very close call. Right? It broke it here. The next minute it reacted and disappeared. Right? So in this case, you can also anticipate a second reaction if you get it. Right? You can also anticipate a second reaction. There's another thing you don't want to do, right? Before I have a few minutes left. When trading Zonda, watch this. I've observed it over a period of time. we have this, right? The market, of course, this is support. Market broke. What am I doing? Wait, I'm coming. We have this. The market, of course, this is a support, did break, right? So what are we expecting? We're expecting a retest here. Of course, the market retested. Boom. That's your first reaction, right? Amazing. If you miss this reaction, yeah, taking the second one might not really be the best scenario or the best case. Because the second one, you might see something like this. Might. Before it continues going. Now, this little move here, right? Let's say you're taking the trade for 15 minutes. This little move here might be your whole 15 minutes, right? It might be your whole 15 minutes. That's why you see that, okay, once a reaction has been done, you're like, oh, it has reacted already. You chill, you wait for that. The main thing here, guys, is to get the best reaction or the best area possible. So in this particular case, I can still entertain a buy here because this reaction here was immediate, right? If all this while I've seen one reaction here, I will discard this idea. I will gladly discard it and look for another opportunity. I'll gladly discard and look for another opportunity. Let me see if I can get an area that beats exactly this. Okay. Reaction, I mean, is the market reacting to a zone. When I say reaction, this is, okay, rejection, basically. Reaction is rejection, something like this. The market was rejected at this area, rejected first time, rejected. So that's what I mean. When you hear me say reaction, it's just the market rejecting a particular zone, telling you that that's a very strong support or resistance. In this case, a resistance. What happened here? On that rejection happened. So the question is, what is making this particular area project prices coming to this area? It's that simple, right? So that curiosity will help you say that, you know what, next time the market gets here, I'm just gonna take a buy because if it could reject it at this area and it got broken, next time it gets here, there's a high chance that it's gonna reject it, right? So let's say I chose this area, this 5 minutes time frame, right? It is 1, 2, 3, 4, 5. Then broke. The next time it came here, at this particular point, I took a 5 minutes or 15 minutes buy. 1, 2, 3. It cleared, but very close to the entry as well. But it cleared. Nice. Me taking the second one. Now imagine this cleared as well. This one cleared. But imagine taking a 5 minutes. Okay, let's say imagine taking a 5 minutes buy at this point. This is like what I told you guys earlier, right? After the first reaction, taking the second one might be quite risky. Not like it's not going to make the move. It might delay a little bit before making that move, right? Imagine, okay, let's say this case, I took a 5 minutes buy here. Market came, 5 minutes, boom, profit. Next time it came here, what happened the next 5 minutes? The market sank below. Now you might think, oh, I think this market is now trending downwards. Then you want to take, oh God. Now let me do this before. This is a fake out. No, that is a fake out, right? You might think the market broke a support zone you're looking at. The market is now tanking downwards. And of course, this market will always show you what to do, right? It will lead you on. The market sold instead of buying. You're like, you know what? Once I get another retest on this particular area, I'm taking a sell. The market did retest, right? You now take the sell, the market kept on buying. You're like, what the heck? So fake outs are always there to deceive traders. I don't know what they're expecting, right? So with the advanced knowledge you already have, to avoid this, all you need to do is, now what this will do is that it's not going to make you take the best entry, basically. but it's making you take a safer trade, right? You're now taking a trade with multiple and extra confirmation, right? Let's say after this move, now for you to continue with the buy idea you want to go in for, you need a confirmation candle. And what is that confirmation candle? A strong bullish candle above the area you're looking at. That is it. And what happened there? Boom. You go in for your 15 minutes or 5 minutes, as the case may be, right? You're going for your 15 minutes because you are looking at the 5 minutes time frame. 1, 2, 3. And you're good. You are good. You don't need to target too much. In fact, if you're taking this trade, you can be targeting this area here, say, right? Like, you know what, this is where I'm looking at. And I believe in the next 15 minutes, market will get here. And the market did this 1, 2, 3, 15 minutes. You're cleared, right? And you're good. So in this HFX, there are so many ways to trade it, right? But over time, I'll start showing you. You know, we have apart from trading Zunda, we have jumping on the trend. When I say that, I mean riding. You are not just trading reversals, you are trading the trend, right? You spot a downtrend, you jump on it, you ride it until it hits the area you're looking at, right? But this kind of trades, you do it for a lower time frame, like 5 minutes, 3 minutes. But there's no rush. We are here. We're going to learn all of that, right? There is a ranging market. There is the Zonda, the trending market, where you trade reversals. Then there's a jumping on the trend, right? You ride the trend. Like you come in here. Let's say this is 5 minutes. You take the first 5 minutes, it clears. The second 5 minutes. Take the second 5 minutes. Take the second 5 minutes. For this move now, you can have like 4 winning trades. But there are ways to it. There's no rush. We'll treat all that over time. Right? So that is it for today, family. I believe you got something. The best way to actually let whatever you learn sink in is to sit for yourself, practice. Sit for yourself and practice. Right? Backtesting can be a little messed up. But then with the right music and the right mental condition, it will make sense. There's no greater thing than seeing what you anticipate happening in the market. You're like, the market is going to buy, and the market buys. It's so beautiful. So beautiful. So by Thursday, okay, ask. I have like ask. It should be fast though. Drop the question. Drop the question. Drop the question. I should end this meeting by 6:40. So drop the question. It's not what I can handle here. The line we put to ensure we trades. The line we put to ensure we trade is called. The line we put to ensure we trade. I don't get your question. Okay, you mean this? The trend line. We have a trend line, we have horizontal lines. Trend line and horizontal lines. Yeah. Yes, it's a trend line. A trend line. Nice. It's a trend line. So family, that is it for this morning. Tomorrow we have high impact news Wednesdays and Thursdays. So anticipate. Over time we'll start calling out trees. Is there step by step to back testing? Sure, there is. I'll break that down in the next meeting, perhaps tomorrow as well. Right? So have the best day ahead, family. Cheers.